Welcome back everyone to ARCHIP News. Today we want to address Bitcoin's most recent drawdown. Making sense of what happened is always much easier in retrospect. We want to do it anyways. It's been less than 60 days since Bitcoin has put in its last all-time high at 126,000 US dollars. Just last Friday, BTC traded down to 81,000 US dollars and has rebounded slightly since. So what's up with BTC? Judging retrospectively, we can see that Bitcoin pretty much topped the week when Google searches for the so-called debasement trade on Google Trends hit an all-time high as well. What is the debasement trade, you ask? Well, the debasement trade means buying assets that hold their value when governments dilute fiat currencies through money creation. Bitcoin and gold are the top choices because neither can be inflated. Gold is physically scarce, and Bitcoin has a fixed 21 million supply as well. While the debasement trade is more like a debasement trend, it did become overextended in the short term. Long queues in front of physical gold stores and the recent correction in Bitcoin's price seem to have confirmed this. Now, has Bitcoin put in a bottom yet? In the short term, there are signs that the drastic price movement last Friday may indeed signal that the worst is behind us. Bitcoin and altcoins both traded at historically large discounts last week, which is a possible capitulation signal. At the same time, Bitcoin has recorded the largest short-term holder loss event in its history, roughly 900 million US dollars on November 22nd. While the size of this figure partly reflects Bitcoin's higher price level compared to past corrections, short-term holders are clearly capitulating, a dynamic that often appears near local bottoms. Another sign that the bottom might be close is the fact that bearish takes have really been ramping up lately. Whether it's Tether skeptics claiming USDT is unbacked, MSTR bears predicting imminent bankruptcy for Strategy, or the latest panic about quantum computing being much closer to cracking Bitcoin than previously thought, are signs that fear and despair in the crypto markets are at elevated levels once again. However, looking at the BTC price chart, we can undoubtedly see that the bulls have a lot of work to do. Bitcoin is below several key price levels. The short-term holder cost basis at around 104k US dollars, or the 50-week moving average at around 102k US dollars. As a result of this, some trend-following models have already triggered their first bear market signal in a while. Going forward, it will be important to watch how strongly the remaining holders use a possible relief rally as an opportunity to de-risk and reduce their positions. If this actually happens, it would be a clear indication that we are no longer in a typical buy the dip regime, but are moving into what is commonly called a sell the rip environment, where investors primarily try to limit losses. After all, we do sit on a paper loss time bomb, given that short-term holders were still sitting on 103 billion US dollars in unrealized losses on November 26th. That's an immense amount of trapped pain still sitting on the books, and if market psychology has indeed broken down, we should expect to see short-term holders materialize these losses. So while Bitcoin's fundamentals haven't materially changed and we still believe digital assets belong in a modern portfolio, it's a possibility that Bitcoin might also want to test Strategy's cost basis as the most important and largest single institutional Bitcoin holder. This currently stands at around 74,000 US dollars and could therefore serve as a true price magnet. And last but not least, we want to make investors aware of the fact that the crypto lending industry stands at an all-time high as well, which could very well mean that retail investors are still levered up and there is still enough retail leverage that the market will try to clear out before the final bottom gets put in. That's a wrap. What do you think? Is the Bitcoin market already bottoming out, or is there more pain ahead? Let us know in the comments. Until next time, and don't forget to like, subscribe and follow ARCHIP for more weekly insights into the future of crypto.